Good morning, master traders and money magnets. You're looking at the Dow Jones right now. I don't think I've covered the Dow Jones in years, at least on my YouTube channel. Now, as far as the ticker symbols that I usually cover, SPY, Triple Q, Tesla, NVDA, I also covered VIX and Coin. I made an aftermarket video. The analysis that I gave and the trading ideas and plans are still valid for today, okay? In this morning's video, I want to cover other ticker symbols that I didn't get to cover in yesterday's video. I do want to give us a reminder that today is FOMC, okay? And it's coming out at 2 o'clock p.m. Eastern time for the interest rate decision, and 2:30 p.m. is when Uncle Powell is going to speak. Now, the last FOMC we had, which is around, I think was January 29th. If I remember, it wasn't a very volatile day that day, okay? Despite the interest rate decision and Uncle Powell speaking, we didn't get much movement in the last FOMC. But at that time, there wasn't much emotions in the market, okay? President Trump was on his way to become president. And then the market didn't start going crazy until, Trump started doing what he said he was going to do. And then that's when stuff started happening. People started getting emotional. The market started reflecting that. And, we had this beautiful move to the downside. Lots of money was made. But now, with everything happening lately in the world, there's a lot of emotions still going. A lot of volatility is still around, although we have been, bouncing a bit. It looked like it's going against the counter trend. It's like a counter trend move, like a relief bounce, if you will. I can't really say Dow Jones looks bullish just yet. We are still in a downtrend. Okay, now with FOMC today, I am expecting a big move because of all the volatility we've been having lately, the uncertainty in the market, the emotions, the fear, all that happy stuff. We have the ingredients. When with FOMC releasing, I want to see if we'll get a big move. I'm expecting a big move. I'm hoping for a big move. In either direction, I don't care. But all I can say is, guys, I've seen FOMC where it's done nothing, like the last one. I've seen FOMC where it bounced $10, $20 to the upside. And I've seen FOMC after the interest rate decision, after Uncle possibly, I've seen where it dropped $10, $20 to the downside, up and down, chop sideways. We got to be ready for anything, and the way we do that is to know the levels, know the setup, so we can trade it in real time unbiasedly. As far as the levels for Dow Jones, remember, guys, I have the levels for SPY, Triple Q, and stuff. Check in the video, yesterday's video. It's called The Calm Before the Storm. As far as Dow Jones goes, I have a level at 417 and a fib level at 418.5. Critical one right there. We cleared that 418.5 level on Monday, but we lost it yesterday. So that is a false breakout potential setup there. Below 418.5, that means Dow Jones is overall bearish. So if bulls want to get a bounce going, 418.5 must clear to invalidate that false breakout. Got to invalidate it. And that'll put the higher targets in play. 420, 422, 424, and have a fib level of 425.3. And look at that. The 200 daily moving average is actually around 420. So clearing 418.5 and clearing 420 would be a good big, well, I'd say it's a big victory for the bulls, okay? It's a recapture of the 200 daily moving average. If bulls want the Dow Jones to be bullish again, a recapture of the 200 daily moving average and maybe some help from FOMC would be a good start to get price back to the upside, okay? Now, if we are to stay bearish and be bearish, staying below the 200 daily moving average is a must. Staying below 418.5 is a must. Breaking down 417, breaking down 415 would send us back to the downside. 413, fib level at 411, and then I think we can drop a lot lower, all right? 409, 409. I have a fib level around 406.3-ish, 404, and another fib level around 402.5. All would be in play if we fail to break out 418.5, if we fail to recapture the 200 daily moving average, If we break down 417 and 415, I believe we'll get more downside. Do not get bullish unless we clear 418.5 and recapture the 200 daily moving average at 420. If we don't do that, stay bearish. All right, guys. Next thing I want to cover is IWM as well. I have a fib level at 203.6. That is the equilibrium level for today. That means above it, I recommend staying bullish and favoring a bounce to the upside. And below it, I recommend switching to bearish and favoring a drop to the downside. Look to react. Remember, guys, the market makers, they telegraph their movements. It's on us to see it. It's on us to slip and move and counter, okay? It's like boxing, stick and move, stick and move. And the way I do it is level to level style. Stick and move, level to level style. All right, so above 203.6, 205.6 is the next fib level resistant. Okay, that would be in play. That would be the target. And if it clears 27.5, 210, 212, and 214 would be my targets to the upside. If we're below 203.6, that's overall bearish still. And if we break down 202 and 200.8, more downside incoming. 199, 197, 195 or lower incoming. Where's that 200 daily moving? It's all the way up here. It looks like the 50 and the 200 daily moving average is about to kiss very soon. Maybe they'll kiss today. We will see. But, you know, there it's all the way up there. The main levels I want us to watch or encourage us to watch is that 203.6 level. Above it, 205.6 clears, more upside is possible. Below it, 202 and 200.8 fails, more downside is possible. Look to react. Apple, looking overall bearish to me, looking like it's like a little small bear flag, and it's still rejecting from the 5 daily moving average. It still hasn't recaptured that moving average yet. That's the short term, that's a powerful short term moving average, guys. It'll have to get back above that if they want to get bullish. And it is around 213.3, so it's flirting with it right now. I also have resistance at 215 and a fib level at 216.6. Those levels must clear to put 220, 221.5, 223 or higher back in play, guys. If we stay below 213.3, stay below that 5 daily moving average, break down the next fib level, it's around 211.7. If we break that level down, I think we could drop a lot lower down to 208 or lower. 210, 208 or lower would be my targets. I would definitely be bear buys below 211.7. That's a loss of a Fibonacci level, okay? And above, like I said, above 213.3, 215, and 216.6, I believe that bulls can get a bounce going for Apple, all right? Amazon's also looking bearish to me. I have support here at 192 and 190. If those levels fail, guys, more downside is possible. If you want to get a bounce going, 194 and the fib level at 195.5 must recapture. 195.5 is important for 2 reasons. It's a fib level and it's also around where the 5 daily moving average is. Bulls really need to recapture that to put a back test of the 200 daily moving average in play, which is around 200. And above 200, I'll be a little bit more bullish with 203, 206, and 210 in play. All right, guys? No bounce is possible unless we recapture lost levels. That's how it starts. It's not always guaranteed, but that's how it starts. So 194 and 195.5 must clear at least on the 15 to 30 minute chart to go in calls. All right? If we lose support, 192 and 190, more downside incoming. Microsoft's also still looking overall bearish to me, but bulls does have some hope. Let me explain. So on this day right here, that day was March 14th, last Friday. We recaptured a lost level, which was the 381 level. We lost 381 on March 13th, recaptured it March 14th. Yesterday, Microsoft backtested that fib level as a support and found some buying pressure. So Microsoft is trying to confirm the false breakdown. It's trying to confirm the recapture. If there is follow through, once again, resistant levels must clear. I trust the bounce from support when it's strong enough to clear resistant levels. And I have 386, 387.5, 390, and 392. You want to see those levels clear. Above 392, I'd be a little bit more bullish. And if it fails to take out those support levels. I have support at 383 and 381. If we lose 381 being the critical one, it recaptured, false breakdown. It back tested as a support, trying to confirm it. So if it's lost, if it fails as support, that would be a big win for the Bears. And I think we can drop all the way back down to 376 to the 373 area. Okay. Meta, I got it on the 4-hour chart right now. This ticker symbol really moves, chat. It's not beginner friendly, but if you know what you're doing, this is like a paradise, a sheep's paradise, day trader paradise. I love Meta. 585 is the resistant level to watch. If it clears, we can get a bounce going up to 590, 594, and 595.4. This is a volatile ticker symbol, guys, not for the faint of heart. But if you can handle it, 585, 587 as well are resistant levels I have. Look to long if they clear. 590, 594, 595.4 or higher would be targets. Said that 2 times. Now, as far as support goes, guys, I do have a chop range, 585 down to 580. Okay? So Bears need to break down 583.5. They need to break down 582. And they need to break down 580. Break those levels down. I think we could drop down to 577, 575, 573.7. Possibly all the way down to 570. All right? But Bears must keep it below 585 and break down those support levels. 580 being the critical one. But if 580 clears, guys, we can get a bounce to the upside. All right, guys, I hope you guys enjoyed today's video. And like I said, if you guys want to check out the SPY and the other ticker symbols that I usually cover, please watch yesterday's video. It's called The Calm Before the Storm. If you didn't, please subscribe, guys. Subscribe, hit that notification bell so you know when Uncle comes on. Sometime I post 1 video a day. Sometime I post 2 videos a day. You know, and yeah, I really appreciate you guys. Remember, FOMC is today. If you never really trade FOMC before, or maybe you haven't found, you know, your flow, you haven't got much success for it, I recommend just sitting on the sidelines and observing, you know, learning, absorbing. Okay, knowledge is power. So even if you don't make money, you still can absorb and gain knowledge, experience, and you increase your value in other ways. Okay, but if you have the experience and you have trade FOMC, you already know Uncle always say you want to size down on days like today because the volatility is going to go crazy. I've seen on FOMC SPY drop 20. I've seen it climb $20. I've seen wild moves, and I'm fingers crossed we will get one of those days today. Fingers crossed. Not guaranteed. The last one was not that good, but times are different. The context, the situation our country is in is different from what it was a month and a half ago. Okay, it's crazy how that's how that is, but you know, that's life. So it's on us to adapt and continue to follow the price action humbly as sheeps. And remember, you guys are money magnets. We follow the price action, the money follow us. All right, peace. I love you. Uncle out.